Welcome, Washington, D.C. Metro, to Ryan Sloper's Real Estate Radio, the most important hour of radio every Monday on 1580 AM, The Big Talker. Thank you for joining me this afternoon. For those of you who don't know, Real Estate Radio is a show dedicated to building the Washington, D.C. Metro's housing and credit markets one house and one person at a time. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted advice. That is my message, and I'll be delivering it to you guys every Monday from 2 to 3 p.m. right here on 1580, The Big Talker. We got some great stuff lined up today. I've had a lot of questions from basically listeners over the last week or two, and I really wanted to, dedicate this show to a lot of the questions that are out there because I've been getting a lot of the same questions regarding credit, regarding short sales and foreclosures, regarding selling your home in these tough times. And joining us to discuss a lot of the topics that we're going to have today is Louis Cammarosano, the general manager of HomeGain. Louis is a real estate industry leader and is consistently ranked in Inman News top 100 most influential real estate leaders in the technology category. Louis, are you there?
Good morning, Ryan.
Good morning, Louis. How are you today?
Just great. Well, good afternoon there.
That is true. It's morning where you're at and afternoon where I'm at.
Right.
Tend to get a little bit confused there, but we've got, there wasn't much that happened in the market last week, so we got a lot of stuff. I want to jump in. First one thing I saw was it looked like the Facebook founder actually bought a home out there in California. I guess it's some unconfirmed reports, but Mark Zuckerberg, who's actually estimated worth $13.5 billion, supposedly bought a house. It looks like in Palo Alto somewhere, but he didn't, I guess, buy the house in his actual name, so there have been unconfirmed reports, but supposedly it's a $7 million purchase on a 5,500 square foot plus home identified in the Real Estate Talker blog post that was originally built by a local pioneer in the mid-1800s. So just interesting to note, this is a guy that's been renting for the last 5 or so years, went out there and probably purchased this $7 million house. It's probably worth more like, 10 or 15 about 10 years ago. Interesting to note there. Let's see here. A quick reminder before we get started that if you have any questions regarding any topics that we cover today, just call the off-air number. It's 877-245-2030. That's 877-245-2030, and I will personally advise you or point you in the direction for whoever can possibly answer your financial question. Now it's time for our Word on Wealth segment. This segment is meant to give you guys an overview of what happened in the market last week and anything that impacts you, the consumer, financially. This segment was brought to you by HomeGain. HomeGain is the place to get you started buying or selling a home, finding a realtor, and getting real estate questions answered. So go to homegain.com today to see what I'm talking about. All you have to do is type in your home address and you will get an instant free estimate of your home's value online. It's a great way to monitor your home's value and it's totally free, so I highly advise you guys check that out. It's homegain.com. On last Monday, not much going on in the markets there. The world was reacting to the death of Osama bin Laden, and it seems like it's kind of been an up and down path as far as stocks are concerned, which is very good for interest rates. Interest rates have been on the down, basically moving down over the last week or two, and Louis, we talked about this numerous times. This is the stuff that we can't control. Unforeseen world events that are happening that are actually pushing money into the safe havens of bonds, which is definitely good for the potential buyers and sellers out there right now.
Absolutely. Don't look a gift horse in the mouth.
Yeah, I know. I was funny. I was just talking to a client the other day. We were kind of trying to figure out what he wanted to do. And, just about 3 weeks ago, we were talking about rates closer to 5%. And then the other day, I'm telling him, about around 4.5%. And he's like, well, looks like I got to move. And I was like, well, what really changed from 4.875 to 4.5%? And I think it's, that stigma of that the interest rate, they get so caught up. There's so many more things that are involved, such as price, such as how long you plan on living in the home, other things that, people can get caught up in what the interest rates are. And to me, whether you're at 4.5 or 4.875, it is a great time to buy a home to protect yourself against future inflation, which we've discussed numerous times on this show. But there are a lot of opportunities out there. And in this Washington, D.C. metro market, it is very, very competitive. I've talked to, hundreds of different agents around here, and they're all telling me the same thing. Inventory is very low. It's very competitive. People that are looking to rent are not able to find the type of homes that they'd like to live in. So they're now turning, whether they're a little bit credit challenged or, they're just trying to find a home any way they can get it. So a lot of renters that didn't have any intentions of buying are actually looking to go that route now. So that's kind of an interesting change, Lewis, over the last, 2 or 3 months, is that the would-be renters are actually turning into potentially would-be buyers, and it's kind of forcing them to look at what their credit situation is to potentially fix that to get into a home. It's a lot different than what we're used to seeing out there.
Well, it's also unique to the D.C. metro area because the rest of the country isn't experiencing that dynamic. As you know, home prices are down across the country.
Yep.
And in many areas, it's not cheaper to rent than it is to buy. But we've talked many times that when it is cheaper to buy than to rent, it makes sense to purchase, especially if you can get one of those low interest rate loans and lock it in.
Absolutely. You're listening to Real Estate Radio. I'm your host, Ryan Sloper, joined by Louis Cammarosano, the general manager of HomeGain. You guys should check out HomeGain. It's a great place to start your search. Louis, would you, it's been a little while. Why don't we discuss a little bit about HomeGain and the services that you guys offer for, consumers that are out there that are just now starting their search and what you guys can offer them to come once they come to your site?
Well, HomeGain is a good starting point to get some information and then to select a real estate agent. We do a number of quarterly surveys on home prices so you can check what real estate professionals and homeowners think the direction of home prices is going to be over the next 6 months. You can also participate in our Find a Realtor program where you fill out a proposal and you discuss what type of home you wish to purchase or the home you're trying to sell. And we then wrap that up and send it out to a number of real estate agents, and they propose to you anonymously. And this way you get to select a real estate agent, or at least one that you might wish to contact from the comfort of your living room or from your iPhone. And this way you don't have agents calling you unsolicited. You get to kind of compare them on an apples-to-apples basis. You can also check out home listings on HomeGain.com. You can get an instant home valuation. So if you just start at the home page, there's a lot of information there. There's surveys about how to get your home sold, what are some of the best home improvements you can make to get the home sold. And we also have a very interesting survey we just did recently, Ron. We discussed this on the show, is the FSBO versus Realtor survey, where we surveyed potential home sellers, and about 1,000 of them, and we checked out what their experience was. And for the most part, you have a 50% better chance of getting your home sold if you use a real estate agent. That's particularly true in this market because a real estate agent can really help you price the home, get it ready for sale, and do the negotiations. And the FSBO route seems to be it's never really captured a large portion of the market, but in this particular market, it's pretty difficult to sell a home on your own in most circumstances. So if you go to HomeGain.com, you can find a real estate agent, get the value of your home, check out listings, and get a lot of useful real estate information. And if you got any questions, you can always contact me directly at Louis@HomeGain.com. That's Louis at HomeGain.com.
Yeah, that's great, Louis. And, I've checked out the site numerous times, obviously, but, there is a tremendous wealth of information as far as, from starting your home search to, doing home improvements. I would highly recommend you guys check that out, HomeGain.com. It's interesting. One of the things on there is, basically an evaluator for if you do certain repairs, isn't it like it can give you an idea of how you're going to better the value of the home?
Well, what it does is it takes the realtor-recommended home improvements, because a lot of people think that if they put a pool in, that's going to raise the price of the home, and it's not based on any empirical data other than they think if they put money into the home, they'll be able to get it back.
Right.
What the survey shows year after year that we do, we do it every 2 years. What it shows is the basic small repairs are the ones that pay back the most. Lightening and brightening, cleaning and decluttering, small paint jobs, fixing electrical appliances, and so on. Those are the things that really help you get your home sold, because your home is going kind of on an interview, and you basically have to dress it for success. And if you don't do that, if there's competition down the road and that house looks better, that's the one that's going to get sold.
Sure. 877-245-2030. That's 877-245-2030. You're listening to Real Estate Radio. We're discussing maybe the top tips for selling your homes. There's an interesting article in Money Magazine on your home, how to sell in tough times. And obviously we have, more of an anomaly what's going on here in the Washington, D.C. metro area that compared to the rest of the country, like we tend to speak about every week. But, for a lot of the areas, that are, been hurt pretty bad, like in Arizona and Florida and all those areas, people are trying to sell their homes. It was kind of, giving some insights as to what people can do to try to make their home more attractive, and not necessarily all physical things that you can do to the house. One of the main top two things were, the first one is undercut your competition. It says in normal times, listings of similar properties in your area would give a good sense of what your home might sell for. Today, there's a big gap between what sellers want and what buyers are willing to pay for. And I think that that's, one of the big takeaways. And I mean, obviously, a little bit of it's common sense. Wouldn't you agree, Lois, that, if your home's not selling, if you just make that little tiny drop down $5,000 or something, it's really not going to increase your traffic. But if you make a substantial jump and you're beneath the rest of your competition, you're really setting yourself up to get more people to come through and view your property.
You have to make your home attractive for sale. There's too much competition.
Yeah, and the second one on there was take out the axe, no bites within 30 days, make a big move. They were suggesting cutting the price as much as 10% of the asking price, and even more in an area where prices are still falling. And I think that, I think that's what a lot of people that are trying to make the move. And there's you also have the thing that nobody wants to talk about, which is the cost of waiting. You hold your price at, let's say that, everything is $200,000 and you're at $205,000, and your ultimate goal is to move out of that house and into another one.
Sure. Well, now, you're in an advantage if you're not in a short sale situation where you can kind of play with your asking price. But many people are in the short sale for they don't really have much control over the price.
But, most of the time short sales are discounted. I mean, albeit not, drastically, but sometimes you're still able to get the property at a 10 to 15% discount. So I don't think that, for at least in the Washington, D.C. metropolitan area, most of these short sales are priced pretty aggressively to entice contracts. Obviously, the Realtor is the one that initially sets that price on there. They do a best price offering evaluation of what they think that home is worth. So they're going to put it on the market. If they think it's worth $240, they'll put it on for $240. The bank doesn't necessarily have to agree to that $240 price. They might come back at $250, but I've seen in most of my transactions that I've dealt with that they've been, maybe $10,000 to $15,000 under what the normal average regular sale would bring in.
Right, but depending on the market, Ryan, if a home is priced too high and it stays on the market, days on the market tends to make the home look like damaged goods the more days that add up.
Yeah, that's true. Well, short sales, we know the days on market's going to be a long time for a lot of those.
Exactly.
We definitely know that. That brings us to an interesting segue, because one of the, major topics or concerns or talking points from a lot of the listeners that have been either emailing me or calling me has been, okay, I hear a lot about short sales. And, I kind of want to, the Real Estate Radio Network and Real Estate Radio is all about providing solutions to you, the consumer, that are out there, whether, you're having credit problems, whether you're trying to figure out, what you're going to do with your home because you're underwater. And short sale is industry jargon for, you're trying to sell your house for basically less than what you owe on the mortgage. And what ultimately I think it should be changed to is more of, we want to provide foreclosure avoidance solutions, because I see it all too many times that, people kind of, you run away from a short sale. You don't really understand what it is, but ultimately it's more of a foreclosure avoidance solution than it is anything else. And, there was an interesting blog, and it was by the KCM blog, and is a short sale or a foreclosure my best option? And when you look at it, what they did was they kind of they took a chart. This is actually a study that was a FICO study that was done, a recent one, to kind of show the impact of FICO scores, whether you were to go through a short sale or a foreclosure. Now, when you look at that just at face value, you would assume that basically both of them hurt your credit score about the same. They did Consumer A that started with a FICO score of 680. If they were late, 30 days late on a mortgage, it would take their score from 680 to between 600 and 620. If they were 90 days late, it would take it from 680 to 600 or 620. A short sale from 680 to 610 to 630. A foreclosure from 680 to 570 to 595. So there's not that much. I mean, it looked like about a 20 to 30 point difference there. But then they took it a step further, and they said the estimated time for FICO score to fully recover with that same 680 credit score borrower on a short sale, it says 3 years, and for a foreclosure, 3 years. So I know a lot of this has been pushed out to people, consumers out there that are trying to figure out what their best solution is. And if you look at just this chart, you're going to assume that, oh, well, it's going to affect me the same. But when you look into it a step further, you really need to find out that, Fannie Mae and Freddie Mac are really changing to where their guidelines are, and even government lending, FHA, and VA standards, where they're going to potentially allow you to buy if you short sale your home or foreclosure avoidance, if you get rid of your house without letting your house go into foreclosure by selling it and shorting the payoff, then you could potentially buy in as little as 2 years versus rather if you went through a foreclosure, which is going to push you out about 7 years. So, there is a substantial difference there. If you look at it at face value for what it is credit score wise and what most people tend to think it's going to happen, you might go down the wrong path. But this is, the number one thing right now, because about 28% of homes in the United States right now are underwater as of today. So, one of the things that I want to offer as Real Estate Radio Network, Washington, D.C. Metro, is offering solutions to you guys. If anything else, I can't guarantee that we can get anything done for you here. But what I can guarantee you is you can call in and get free advice from me. And I will, run through the different things. Refinance. We'll look and see if a refinance is a possibility, because there are still some options with refinancing that allow you to refinance up to 125% of what your home value is at right now. If you can't go that route because you don't have a Fannie Mae or Freddie Mac owned loan, then we might look at a modification. Now, I will tell you right now, modifications are not that great. And a matter of fact, over 50% of loan modifications redefault after they're actually modified. So that might not be your best option either. However, going in and finding a foreclosure avoidance solution where maybe we can get a real estate agent that, handles these type of transactions might be the best option. And long term, to be able to get you back into another home in the shortest amount of time, that probably is going to be the best case scenario. You're listening to Real Estate Radio. I'm your host, Ryan Sloper, joined by Louis Cammarosano, the general manager of HomeGain. Give us a call at 877-245-2030. That's 877-245-2030. Louis, there's been a couple studies out there that say that, obviously there's 28% of all homes are underwater as of today. And if you are underwater between 20 and 25%, meaning you owe about 20 to 25% more than what your house is worth as of today, on average, it will take about 13 to 16 years to recoup that equity to get to a break-even point. Now, that's pretty incredible, don't you think?
So that's why a lot of people are doing the strategic default.
Right. But, it's like one of those situations, too, where, there is a lot of strategic defaults, but I also think that a large majority of the people out there are kind of in debt up to their eyeballs, where they don't even have the credit scores to even have an option to do a refinance, number one. You know what I mean? They're at 620, where they're going to require you a 680 score to do any of these high, 125% refinances. They're not even going to meet the criteria for those.
Yeah, what you're highlighting, Ryan, is the need for qualified financial and loan advice and also real estate advice, because 5-10 years ago, people just bought a house, got a loan, and that was the end of it. They weren't thinking about their credit score, impact their credit score. And I think there was a statistic that 72% of people picked the first real estate agent they met, and that's kind of insane, especially in today's market. If you're going to do a short sale, you need a qualified realtor to really help you. So that's what I was mentioning earlier with HomeGain. You can actually go to there and compare real estate agents to make sure that you get the one who is going to be very sophisticated in the type of transaction that you need to do if it is indeed a short sale.
Yeah, and I mean, it's very important to make sure that you're getting the proper advice for your situation. I think a lot of the times it's just kind of generic, like we just throw out, a short sale is going to be perfect for you, without actually asking all the pertinent questions to make sure that you are indeed a candidate for that.
And then, and once you are, if you think you are a candidate, when you interview your agents, is how many short sales have they done? What have been the circumstances? What has been their success rate? What is their marketing plan to get your home sold, and so on?
Yep.
It's very important to get that down, and it's also, as you mentioned, very important to figure out what your options are and what the ongoing impact is going to be to your credit score. It's not just as simple, I need to get this home sold.
Yeah, absolutely. I mean, yeah, because a lot of these short sales transactions that have gone through, and I mean, a lot of the clients that I'm talking to now actually had a short sale that was 2.5 years ago. Well, now I'm coming back and looking at their credit report, and it's interesting to see how some of them are reported and how others are reported. And a lot of that has to do with, with deficiency judgments and how things were reported when that short sale was done. And I know back when there wasn't as much documentation, but there's, you can negotiate all that stuff up front with that short sale transaction before you actually close. So it is critical to make sure that, you're hiring somebody that's going to take care of all those things and make sure that you're not putting yourself in a more financial burden down the road. Because ultimately there's been a lot of talk out there that, if there's a first and second lender involved and the one second lender gets booted out just because they pay him $1,500, they can still come after you for that deficiency. And, it may not be 1 year, right, or, a year or two down the line, because right now they're too busy to worry about it. But what's going to happen like 5 or 6 years down the road when they start selling that, that loan that they had to a collection agency, and then they start hounding you for that $50,000 or $60,000 or $100,000 second mortgage? That's something down the road that people aren't, if they're not careful, it will bite them in the rear end. So, that is a critical component there to me, is to make sure that, you're covering all the bases, working with the trusted professional, like Lewis said. 877-245-2030, 877-245-2030. Reach out to me. I'd be glad to give you some, unsolicited free advice. Like I said, I can't guarantee you anything, but I can, tell you that I will give you the best advice possible, and I will point you in the right direction. We've got a lot of free reports out there. The best tips to, selling your property if you're underwater. I'd be glad to give you guys a copy of that. Reach out to me. You can go to my website at www.ryansloper.com. There's a contact me button on there. I'd be glad to forward you that free report on that. And there's, we have a lot of other credit tips and stuff like that. But, there was another interesting article, Lewis, that was, shedding a light on the shadow inventory that's out there. We've been, we started talking earlier this year where we thought, when are all these foreclosures going to hit the market? And, it's been interesting because they keep saying, Fannie and Freddie keep saying, we have a lot, the foreclosures aren't slowing down. We have a lot of these that are going to hit the market, but yet they still haven't hit the market. Well, this article, this is from the KCM blog. They show that distressed properties are about to increase, and they went in and pulled statements from Fannie Mae and Freddie Mac. The first one was from Fannie Mae that says, our foreclosure rates remain high. However, foreclosure levels were lower than what they otherwise would have been in the first quarter of 2011 due to the delays caused by servicer foreclosure process deficiencies and the resulting foreclosure pause. From Freddie Mac, they noted that we expect the pace of REO acquisitions to increase in the remainder of 2011, in part due to the resumption of foreclosure activity by servicers, as well as the transition of many seriously delinquent loans to REO. So what this ultimately means, more foreclosures will be coming to the market throughout 2011. And who does this hurt? Well, it hurts you, the seller out there that's trying to figure out when's the best time to sell your home, because if you're going to wait, the more foreclosures that come on the market are going to come in at obviously a lower price than what you have yours listed for. Could be a drastic difference. It could bring the values of the neighborhood down. So, this is something that we haven't touched on, Lewis, in a little while, but I think it is interesting to note that this is going to happen, and it's just a matter of time when these start to be released in more in a bulk scenario where you're not just seeing the onesie-twosie to market. They have to, at some point, come to market. Wouldn't you agree?
I think there's over 1 million of them. It depends on what your area is like and what the pipeline is going to be, but in many areas, there's such a backlog of shadow inventory that's going to hit the market. Then the question is, if you do own a home, do you wait it out or you get out in front of the wave? Because also, a lot of people own homes are in the downside sicky situation where if they were to sell, they probably either break even and they're kind of just holding on because they can.
Right.
But if over the next 2 or 3 years the home prices are going to continue to drop, they're going to see their equity go away. And I think there was a survey out today by Zillow that showed for 57 months straight now home prices have declined. So in many areas of the country, waiting is not a good idea.
Yeah.
But in areas like the D.C. area, it may be. It really is case by case, isn't it?
Sure. Yeah, it is definitely case by case. And, we're coming up on a break. But when we come back, Lewis, we're going to discuss more with you. But also, that for a lot of people out there looking for bargains, now might be a good time to grab a second home bargain, especially in the areas like Florida, Arizona, and Nevada. Real Estate Radio. Be right back.